This is the London FinTech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman. This is the London FinTech Podcast, episode 167, brought to you in association with Smart Pension and the enlistedboard.com. And I'm delighted to be joined today by Tobi Taupitz, founder of innovative, a word I use rarely, insurtech Laka. Aligning interests is much spoken about, but little done. Over 2.5 years ago, when Tobi was last on the show, he spoke about the founding belief of Laka as being to align their economic interests with the client's economic interests. Now, we hear this all the time, but it's rarely 100% true. In Laka's case, I believe it is, or Tobi can tell us if it's only 99% true later, as they do not take payment for insurance up front, but rather earn money when they pay out on a claim. The opposite of the insurance industry, as I found this year with our insurance on our skiing holiday. It's a back to the future approach, back to the origins of insurance as being collectives, co-operatives of, say, Swiss dairy farmers up an Alp, bonding together for mutual, a word I use deliberately, support. Well, 2.5 years ago, it sounded like a wonderful idea to form a commune where everyone's interests are aligned, but one that would need careful paramaterisation. As with anything in life, one needs to balance compassion for others with compassion for yourself. All too many, for example, teachers, doctors, etc., go into their profession with the best will in the world to help people, but some come out of it decades later, bitter and cynical. In the same way, you can set up a company tomorrow that is totally 100.00% focused on client value, but if you are 100% on client value, then that tends to mean, or in some cases, 0% focus and 0% value for your business, and at some point you go bust, which doesn't really help the clients in the long run. So let's dive into looking at a truly aligned insurtech where clients and Laka's interests are the same. How has the model worked out compared to expectations? Is it easy? Is it hard? Is it widespread? Is it catching on elsewhere? What does the future hold? Plenty to talk about, so let's get on with the show. Good morning, Tobi. Thank you for joining me on the show today.
Pleasure to be back. Thanks, Mike.
So, last time when you were on, we were together in the same room. Now we live in this sort of virtualized world, and there are many challenges of the virtualized world, one of which is that one just sort of slobs at one's desk all day. I have actually, after a couple of episodes ago, had Alex Baluta on the show, and he had a standing desk. Now, I've got a standing desk, but I have to say it wasn't used for many years. However, now I'm actually on to doing, 1 hour or an hour and a half standing at my desk every day. And this week, after the latest tyranny, where the data's now falling apart over lockdown, as being shown as a bunch of lies, I did come up with a Project November, and I calculated how many times I need to walk up and down the stairs every day to amount to, at the end of November, having climbed Scafell, England's highest mountain. So I'm busy walking up and down the stairs 3 times a day, which sounds fairly easy when you come up with it as a great idea, but I think after a while my legs are going to get a bit tired. But at least that sort of gets me going from the desk, which I've been failing to dismally. However, you're young, fitter, faster, got hair, got all the sort of things that I no longer have, teeth, 2 legs, 2 arms, that kind of stuff. And you were saying that rather than being a sort of amateur like I, you're much more into actually getting fit rather than just avoiding being a complete slob, which I think is my actual plan.
Well, we all keep trying, don't we, in whatever shape or form. I'm a big believer of home fitness, or rather I converted as of late in many great ways, especially with Laka's focus around cycling. There are many great ways of doing so. Many in the team, for instance, have a turbo trainer, so they would just take their bike and use their actual road bike for a spin in the living room. I, for one, we have a Peloton as of late, so proud acquirers of those trends. And yeah, actually anything you can do from home is just amazing to get you moving.
Yes, now I heard of Peloton once or twice, but like most things that have happened after the Beatles had got to number 1, I'm not so familiar with it. So maybe there are 1 or 2 listeners who actually, like me, aren't entirely familiar with the Peloton machine, but it's a hot and sexy, souped-up home bike. I mean, what does it actually amount to? What does it actually do for you?
So in a way, it is a spinning bike that you use from home. It comes with a screen you can download.
And a spinning bike, by the way, let's define terms.
It is a bike that you use in your office or your living room, basically, in the purest sense of the word. And it just gets you going indoors. You can cycle away indoors, and it comes with a fancy screen with fitness classes you can follow and pursue. So it's a bit of a guided, quite hyped version at the moment of the traditional fitness spinning bike.
And we bought a few years ago and occasionally use it for something other than sort of hanging clothes off, a home exercise bike. I mean, it was quite a pricey one. It was, I don't know, about 600 quid or something. It's not some cheapo thing. But at the time, I recall a spinning bike was somehow different. I mean, it was super hyped, but wasn't it something like it's got a fixed gear or something different? What is different about a spinning bike as opposed to a good quality home exercise bike?
To be honest, it's probably quite similar. What you can do is you can change resistance, and it's all about resistance and cadence. But again, it's a traditional product that's been put into a different corset and make it a bit more funky. I think it's all about, and again, quite in reference to Laka, triggering a community, which I do quite well. There's a lot of chatter on Facebook and other forums, for instance, and people just take part in competitions and challenge each other. So again, it's more like a guided spinning class from home, if you really want.
Oh, I see, yes. I don't know how the software works, but the challenge with these, as with most tech products, is software and updates and that, in that the bike we bought had a facility to run it alongside an app via Bluetooth, which used Google Maps and actually did the terrain and showed you the sort of, the street view and all that kind of stuff. So Bridget very conscientiously set off to do Land's End to John O'Groats, and actually did cycle all the way through Cornwall, which she found sort of very interesting, because actually you're not just sort of staring at the bloody wall or whatever you're doing at home or something like that. And the resistance varied as it did at Cornwall, and hopefully by the time you get to Scotland your legs are a bit stronger. But then, quotes, the app stopped working and the vendor said, well, we don't do the app kind of stuff, at which point the expensive functionality that you think you bought, you've been locked into something which no longer works, and that they wash their hands of it. And unsurprisingly, actually, the lack of that functionality made a huge difference in terms of the usage.
I think no matter what you think of Peloton, I think what they do quite well, but the Apple approach, hardware plus software, and I think that allows them to have a beautiful experience, beautiful designed experience front to end, the content, the app itself, and the hardware, and I think that works quite well for them, especially in a situation as we have it at the moment.
Yes, exactly. And I think, from a business model perspective, it's very easy to create some product and get lots of marketing and push it out there. But in terms of the long term, leading nicely into Laka, of course, one's brand is quite hard to establish for a new venture, but it's pretty easy to piss it away. As many businesses have found, you only need, one scandal, one catastrophe or something, and then you've lost trust. And in a world such as we are, even before lockdown, trust is the most valued commodity, as I'm sure you find day in, day out at Laka, just as it is in all human relationships. If you trust somebody, you'll forgive them mistakes and errors and all that kind of stuff. Whereas, as the Oxford people were pointing out about the UK dodgy data used for lockdown, all of these so-called errors, unquotes, in the UK data have all been on one side, which is massively hyping up the fear and all that kind of stuff. So the trust is breaking down, and that's a sort of dangerous situation. So before we get into trust, and obviously one of the good ways to trust an insurance company is that actually they do look after you. And like, I shall not mention HSBC, who were the people who did our travel insurance, where once you've lost trust, you can't really get it back very easily. So before we go into how community-based insurance, or whatever you call yourself, can create trust, I've forgotten, extraordinarily enough, I've forgotten the entire details of your career journey, or maybe not the entire details, but just sort of even the big picture overview.
With pleasure. So I've been tainted from the early days. My dad is an insurance broker home in Germany, so I grew up with the topic, went to German way of education, studied insurance business and apprenticeship and the likes. Ran away from it as fast as I could after that to start in corporate finance, and came over to London in late 2013, 7 years ago now, to start working at Barclays doing corporate finance M&A. And was quite lucky there. I focused on fintech and insurance clients at the same time, and at some point these two worlds would just come together, and I started asking some basic questions. What is insurance and does it make sense? And that was the moment Laka was born, in my head at least.
And so when was Laka born in your head, and when was it born in terms of you having somebody working with you alongside your head?
So probably in very late 2015, early 16, when the idea took shape and form. And then I probably spent another 6 months whilst trying to juggle my day-to-day job, whilst validating the idea. I snuck out of the office from Canary Wharf to meet people in the city to validate my idea. I recall vividly every time I came back from one of those coffee dates, people congratulating me on my private equity interviews, which was not correct or true, but obviously suspicion was high in that environment. So it was hard validating that along the way, but I spent around 6 months doing so. And when I left full-time in summer 16, I went on this speed dating exercise for co-founders, which actually was not really speed dating because it took me 3 months. But the co-founding team, for example, we came together really in early November 16. I think that was when Laka truly was born, from ideation to taking action.
And when was the first client onboarded?
So we're talking insurance here. The whole mantra of test and iterate, or test and fail fast, doesn't really apply to insurance. You have to have a license to sell your first policy, to earn your first pound of revenue. So from coming together in November 16 to selling our first policy was in a 14-month journey. Early 2018, January 18, we got live, basically.
Yes, I recall. No, so you were one of these rare early stage companies who come on the show, because generally I just try and showcase what has worked. For example, next episode is Plaid, who are currently selling themselves for $5.7 billion to Visa, so we can assume that sort of Plaid has worked. But in your case, the model was sufficiently interesting that I really thought it was one that we should know about, so I'm very pleased to hear that you're still going 2.5 years later. And it's interesting, I'd forgotten that you come from an insurance family, and it's less a case of the sins of the fathers should be visited on the sons, as more as the sons shall cast off the sins of the fathers, and amend their father's industry, or rather take it back to its roots. So, talking of roots then, the listeners may or may not know to a smaller or greater or larger extent the origins of insurance per se in the modern world. So would you like to briefly just talk about the origins of insurance and what kind of factors perhaps led it to move away from the sort of the mutual support roots and turn into a different kind of model? Not that I'm bitter, but I'll mention my ski insurance again, where it's one of those products where people buy it and they're very pissed off. I mean, I buy CDs and they work, and I buy phones and they kind of work and that kind of stuff. But many people have found they buy insurance and it doesn't work. Having said that, it's a two-way street and there's plenty of fraudsters out there and all that kind of stuff. And, so it's not as simple as it looks on the outside, of course. But anyway, the origins and how the origins started to be sort of forgotten in a sense.
Yeah, absolutely. I think there's early evidence, and I won't go all the way back to 2,000 years ago when insurance appeared first. I think modern insurance, in quotation marks, is probably 300 years old. Deloitte's pub days, people came together to insure ships and the cargo around it. In similar times and before, you had the farmers in the village coming together for the event of a farm burning down. So it's this mutuality aspect. You spread a loss across a large group of people in whatever shape or form. And back in the days, it made perfect sense to determine the risk with the best tools available at the time and charge people a premium for that. You had to do that beforehand because people would literally flee in the woods when it comes to premium collection if you were to do it in the current Laka model in arrears. But again, it's a business model that by and large has not changed over the course of centuries. If you think about it, it's still based on actuarial principles. You estimate future claims forward-looking. You add your margins on top, risk margin, profit margin, expense margin, to get to your, let's say, £10 premiums a month. And that concept more or less has not changed. Actuarial science is about forward-looking estimating claims, and that has an adverse outcome potentially because you hardly ever get it right. Either you charge too much or too little, but you cannot estimate claims perfectly despite all the talk around big data. Of course, we've gotten better around that, but nonetheless, it's an estimate, an assumption to a certain degree. And it's quite interesting how we had this mutuality aspect a few decades ago. There were lots and lots and lots of mutual societies, mutual building societies in the country across Europe. More of them changed the business model to become a listed company, to take up external funding and the likes. And with that, of course, shareholder pressure starts to mount, and it's quite difficult to move away from out of line almost. A few insurers have tried to be more generous than others when it comes to claim settlement, but very quickly shareholders would ask to go back in line, asking why are your loss ratios higher than with your competitors? Go and fix that. And with that, there is this eternal pressure in the industry to make sure to deliver great returns. And you wonder what the remit is, who comes first, shareholder or customer? And I think we've just gotten off track a little bit because conceptually insurance is a fantastic product. If you are misfortune, you really want to make sure that you have some coverage if your own house burns down. And that applies to hundreds of years ago as it does today. It's just about execution. So I think what we have come and tried to do is just reassemble the value chain, put all the pieces into a box, shake it up. The output is the same, but the input and the way we go about it is quite different.
That's interesting. So yes, I like the point that it's the corporatization of insurance which has created a challenge, because you've got a different class with a different set of interests, which we'll come on to later, but it's obviously an interesting challenge for Laka as to how you handle this, because although you have a mutual approach, you have shareholders, you may have even more shareholders soon, as I think you're going to tell us. And how does one balance that out? I mean, you're quite right, of course, about the sort of huge chunky losses, I mean, which nuclear power always comes to my mind. I had a conversation quite some time ago with the odds-on favourite to be the next head of Lloyd's Insurance quite a while ago. And I was being asked at the time, how would one assess nuclear power station risk? Because the problem with nuclear power station risk, if you say, oh, you've got a nuclear power station, Toby, right, okay, that's going to be 500 million per annum premiums. You go, bloody hell, is it? Right, okay, it's going to be a thin market. So if everyone else says 500 million, you have to pay 500 million or not insure yourself, which you can't do. So then what happens, for example, is then no nuclear power station blows up for 50 years and we've all made loads of money. Vice versa, of course, which is I say, oh yeah, 5 million, yeah, you're not going to blow up. And the market has to charge 5 million, because again, it's a thin market. And then a nuclear power station blows up, it costs 5 trillion and you don't get the insurance and yada yada. So the large chunky stuff is really difficult. And then the more you've got, once you're onto car insurance, sure, you can't predict whether my car will crash or not, but you've got, I don't know how many cars there are in the UK, for the sake of argument, 30 million cars. And if there was one insurer insuring all that, so the number of crashes is relatively more predictable. So, okay, so the corporatization introduced a challenge. So in terms of reinventing the mutual mentality, shall we say, and let's talk later about how one sticks that into the corporate form. How did you go about thinking around how to reinvent a more mutual model? And then we'll move on to that, to my concern 2.5 years ago, which is, hey, it's great, you're setting up a commune, it's going to be all peace and love, and you're going to love each other, and I really hope it works out, because peace and love sounds great, and I'm into peace and love, and I'm into alignment of interests, but I've been around a bit, and not every commune works out, and largely because problems and challenges crop up, and they don't sort of get resolved or to everybody's satisfaction. So going back to your original concept when you were last on the show 2.5 years ago, how did you reinvent it in your mind then? And then, most interestingly, I think, what has your experience been of doing this model over 2.5 years? Where have you had to tweak it a little bit? Where have you had to tweak it a lot? And where has it worked much better than you actually were ever sort of really hoping in your heart of hearts 2.5 years ago?
So interestingly, the model is more or less still the same as we had it from day one, of course with tweaks here and there, but we didn't have to do the hard pivot because it was just not working. So it was the first big, not surprise, but really great validation in the first place. I think it's all about, the answer is in incentivation, right? So why is Laka model working, and why do we think it's the way forward? So insurance inherently has this flawed concept, as described before. You estimate forward-looking claims and you cannot get it right. You can get close, but you can't get it right. And with that, you potentially very likely charge more than you need. You have the money on your books first, you have it in your pockets, and from here on you have to give it back. But of course, nobody likes giving money back that you already earned. And that creates the friction in the claims journey down the line. In fact, settling claims is a pure cost center for insurers. That means I have your money already, now I have to give it back, and that costs me actually also money to actually facilitate all of that. And hence many claims functions are outsourced to what's called third-party administrator, and third-party administrators in the middle of nowhere to take care of customers' claims, the very service you are actually paying for. So I think incentivation is the answer in all of this, in reassembling the value chain, making sure that you profit alongside your customer, not against your customer. And that also comes down to the shareholder topic that we talked about before. We have tried to build something, I guess, in simple terms, which is a win-win-win, where the customer wins, Laka wins, and also our partners in the background win, because we make money when we settle claims, when we pay out, not when we reject them. And with that, the whole mindset changes altogether, because we invest heavily in our claims function. That's our core bread and butter. The more claims we settle, the more money we make. So it's really important to us. And with that, the customer wins, because we're not incentivized to reject the claim, but to pay out, which is quite perversely the opposite of what's currently going on, with checks and balances in place, of course. So again, I think it's possible to reinvent the wheel in a way, and it's not that difficult. But if we now turn to the credit industry, in a very simple words, if American Express can do it, we can do it. That was the mantra back in the early days. We can manage credit risk much better. The risk of customers not paying up retroactively, rather than insurers taking money first and manage the underwriting risk alongside. So I think what we learned early on was payment default risk can be managed. We have now 34 months of a track record where we have 99% plus pay-up rates on a monthly basis, so that seems to be working. We've gotten a lot better in explaining our model. You will laugh at the comments we had in our early days. We obviously had a lot of friction in our journey, so we tweaked that and how we explain it. But of course, we had people commenting on Facebook ads, an insurance proposition where there's no premium upfront. That can't be right. It must be a scam, avoid. So that took a little bit of time, and the too good to be true mantra and mindset. But yeah, surprisingly stable since we started out.
Okay, so I think it might help people actually to understand how that works in practice. So I take this exercise bike, which no longer will cycle from John O'Groats to London upstairs. I put 2 proper wheels on and I take it outside, because at least then Bridget can actually see things as she's going from place to place to place. And I think, oh, I need this insured because it's sort of so expensive now. It's the world's only home exercise bike that's been adapted for outside. It won't be a very fast one. I'll get Laka to insure me. How does that work then? So you don't want any money from me. You say, oh, you're insured, Mike, that's fine. I go, oh, that's good. And then in 3 months' time, the bike gets nicked because it's so rare. And I say, oh dear, sorry, Toby, the bike got nicked. Can you pay me £2,000 to make another one? And you go, yeah, sure. So how does it actually work in practice? And then everybody else is in the mutual has to fork out for my bike.
Exactly. In very simple terms, we are still based on mutualizing risks. So the Laka Collective, we call it, chip in retroactively at the end of the month. So when you come to my website, to our platform, you tell me what the value of your bike is, let's say £1,000. And with that, we'll give you not a fixed insurance premium that we have calculated up front. We tell you instead that, look, Mike, £1,000 bike on average, you can expect to pay on a monthly basis around £5. That is based on the last 30 months or so that we have data for, and that is becoming more stable as our risk pool grows. So you know roughly what you're paying for each month. That is moving by a few cents left and right now, but you have a fairly good idea. Of course, customers don't like the idea of moving in variable payments, so we also give you a maximum price, the worst possible outcome if we have thousands of bikes stolen in a month. So you know the maximum price, which we actually cap at market rate. So the worst possible outcome with Laka is that you pay what you pay elsewhere. But if the Laka Collective takes better care and fewer claims happen, you pay roughly half that and pay around £5 in that example. So we want really to put accountability onto the Laka Collective. At the moment, there is no incentive for you to take better care. If you don't claim, it's the insurance company that wins. So you might be a bit more sloppy. In our world, the less claims occur, the less the Laka Collective pays altogether. And with that, there's a strong incentive to drive claims as low as possible, which in an extreme would mean if there are no claims in a month, customers wouldn't pay anything. And rightfully so, we have not provided any service whatsoever, so we shouldn't be paid. So that's the whole mantra about Laka. We facilitate a risk pool, a group of people, cyclists in our use case to begin with. And we ask them to retroactively share the cost of claims the Laka Collective incurs in a month. And that has been going quite well. And again, once people got their head around it, people start asking, why is insurance not done that way in the first place? Because there are 3 important things. A, we accurately price our collective. You cannot price any fairer than the actual cost of claims. Second, we make money by adding a fee on top of the claim we pay out. So if there are no claims, we don't get paid. And with that, we also make money when we act in the customer's best interest, paying out, not the opposite. And lastly, we can offer brutal and full transparency. So every month, customers get a bill showing what their share is they have to chip in. And as a last word, you pay only pro rata for the insured value of your bike. So someone with a 10K bike, and yes, they do exist in surprisingly large numbers, would pay obviously more than you with your modified home stationary bike of 2K, for example.
Okay, so I get it, and that's clear. So in terms of capping, that says to me that there is a tail risk which you will need to reinsure somehow, and actually maybe you have to use an insurer anyway. I mean, are you a broker or insurer, or do you use a reinsurer? Or how does it work that way?
You're 100% on the money. We reinsure that long tail risk. So the cap basically is outsourced to an insurance partner, Zurich Insurance Group in that case. And we are an insurance intermediary, but we have the right to onboard, administer and settle claims all in-house. So we look like a fully fledged insurer, but we're outsourcing the balance sheet risk, as it's called, to a third party.
I see. Interesting combination. So then, briefly, this sounds like a good idea you had in the first time. You validated it because your business is here 2.5 years later and you're doing well. I mean, roughly how many bicycles or peoples are you insuring now?
So a fun fact is we just passed 10,000 bikes insured, worth over £26 million in insured value.
Wow, that's quite a lot actually. Do you realise that's quite a lot?
That's one big garage full of bikes.
Impressive. Gosh, I should have found this out before. My completely thorough research omitted that fact. And so is everyone copying you? Is no one copying you? What's happening briefly in the world of sort of remutualized insurance, something along these lines?
So we have not come across anyone copying our model just yet. I think it's great validation. However, there is one company that was quite in the news last week, Ant Financial in China. They have an insurance subsidiary that actually offers critical illness cover in a very similar model. Again, people chiming in retroactively for cash payout if the worst happens. It's nice to say that we actually came first, but of course the sheer size of Ant Financial gives them a really good customer base to sell to. So I think it's great validation that I would say we both in parallel had the same thought, and I'm quite happy with that, to be honest. So I would very much welcome more people picking up the model. I think the way we go about insurance just makes sense for the mass market, not so much for the nuclear plants as we talked about, but for the mass market. I would welcome anyone to look into this model further, and I think it's just the way to go in the coming years.
So that leads to the question of what the future is for you guys. Maybe we'll come on to that after thanking everybody, looking at the future of what you're doing, because clearly you're showing that it's succeeding. It's a very interesting model with a number of attractions for customers, but I would suspect it's very hard to suddenly go from insuring 10,000 bikes to 10,000 cars, because you're talking about a different thing, and we haven't touched on it because we can't touch on everything, but there must be a benefit of having a community like cyclists where there's it's a high trust community, as opposed to cars where there's no connection between me and someone else in Scunthorpe or Aberdeen or Cardiff, their cars. So I think that's presumably a parameter. Before we wrap up the show, I'd like to thank all you listeners out there. I'd like to thank my brand partners for the podcast, Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrollment.co.uk. The unlistedboard.com, resources to help you start making your board an engine of growth today. So in terms of the future, Tobi, and this question then, which is, once you've insured every bike in the country along these lines, well, that's bikes, you've got a tick. Maybe you don't even insure every bike, but you insure a hell of a lot of bikes. What do you do next? Because you can't really move into car insurance or house insurance very easily, can you, with this model?
Well, we could, but the question is, do we want to? I think know your strength and play on that, I think is one of the core mantras we are following, pursuing. So yes, we could go into car insurance, but I would argue it's harder for us to get to 10,000 car insurance customers than to go to 50,000 bike customers, for example. What we're doing is we're really branching out from the first bike enthusiast market we serviced to the city cyclists, the commuters that are obviously growing now with people avoiding public transport. And then as a third, the real growth obviously lies in the e-bikes and the e-scooter market, for example. And there are some tremendous facts out there. 150 million e-bikes are expected to be sold in the European Union in the next 10 years plus. So you see there's a big wave coming our way. E-bikes are much more expensive than the traditional city bike. So I think we feel quite strong in a niche, and we can service that niche or segment quite well. We've done some deep market sizing, and we estimate there's going to be 125 million weekly active cyclists in the European Union by 2025. So obviously that is a large market for us to play in, and we want to service. And on that note, we have launched in the Netherlands. Well, we are just about to. We got our regulatory license as of late, and we are looking to go live in the Netherlands in a matter of days now, which will be our entry gate to the European single market, which is an important thing in a post-Brexit world. So our play is rather to sell our proposition to customers we know and understand very well, know how to reach them across Europe, rather than offering 10 different products where we would potentially provide a mediocre experience. because yes, the business model would work in other business lines, but the claims experience is so important. And I would argue I can service an Italian cyclist or a German cyclist quite well, whereas a British home or car insurance provider, I might not have the same edge, so to speak. So yeah, European expansion is definitely on the cards. But of course, looking at adjacent products, we just launched a personal accident product, for instance. There are multiple insurance products along the way, but with a clear focus on personal mobility.
Interesting. So anyway, it's the classic beachhead strategy, which is you've landed on Normandy Beach and you spread out from Normandy Beach. You don't suddenly try and invade Greece or Turkey or anything like that. And I don't know whether you've noticed, Toby, but I think there's quite a lot of bikes in Holland, actually. So they might be interested in bikes over there. It may be a coincidence or not, I don't know. So all this interesting expansion presumably needs capital. And I think you've got some interesting news about what you're up to at the moment on that front. And do you need capital from nice people who are aligned with being mutuals and hippies and not wanting dividends? Or do you want capital from people who are in the markets that you're serving, and therefore, like some breweries that we may or may not mention, you find that actually you want to help the alignment by getting capital from people who are customers, which actually keeps the mutual loop going, rather than, for example, I don't know, funds come to you from Australia from some VC fund that just wants 1,000% ROC kind of stuff. I mean, you know, we talk about corporations but there's companies and there's companies. We talk about shareholders, but the shareholders and the shareholders. So is that one of your solutions, which is to segment or to choose your shareholders?
To your question, we are VC backed, and I think it's an important source of capital, but you are hinting towards something very exciting. Only this week we have launched our crowdfunding campaign on Cedars. So I think the mutual model is just destined to give it in the hands of the people. We are out there trying to make as many of our existing customers shareholders. I think it goes very well in terms of the mutuality aspect, taking care of each other, being part of something bigger, getting your full interest and buy-in for that. So I think retention is a really, really important tool here, and one of the core reasons why we're doing it. At first count of the pre-registrations, over 50% of our existing customers have bought into the idea of becoming owners of Laka, which is super, super exciting. And the second bit, of course, is we want to branch out and win over new customers. And of course, they are potentially either cyclists themselves, they know of cyclists, they have links to the industry, but I don't want to limit ourselves because Laka has very wide-reaching ambitions. So anyone who feels that is a mission that they can identify themselves with are more than welcome to take a look. We're going to be going for another few weeks on the platform.
What is it in date times? Because always amazingly to me, it's not just a question that listens and downloads carry on for weeks and months they do, but actually they carry on for years. And I think actually one of the things about that, because obviously I've had 6 years to think about this, but one thing about that is I think because the London FinTech podcast is quite strategic and quite blue chip, then even in 2 years' time, someone thinks, oh, I wonder what Toby said on the LFP, because they start off with the big picture, and the big picture is probably very similar. I mean, if you're doing a news-based podcast, nothing wrong with those, just different sort of segments of the market, then that ages very rapidly, and what's great news today is sort of out of date in a month's time. So when is your crowdfunding, roughly speaking, going on until in terms of dates?
Very fair comment, and since we are on audio here, I can't hold up a newspaper with the date on top of it.
People will believe you.
No, we are looking to close out our round towards the last week of November 2020, potentially a few days early, depending on interest and appetite. We have a few ideas we want to get towards, but we have just launched, which is basically the first week of November 20, and we'll run this for another 2 weeks. So let's talk mid-late November 2020.
Excellent. Well, I wish you every success with that. Are there any other shouts out that you'd like to do to listeners? I think cyclists by now should have worked out that they should check you out. If they haven't already, then they're very remiss. So cyclists should check you out. People who want to invest into a business via Cedars that's actually trying to align interests between the business, which is of course the shareholders as well, who own it, and the customers, then should obviously check you out as well. Anything else that you're after, Toby?
I think it's something out quite well. Cyclists, please check out Laka. It would be fantastic to have you on board. But we are not a UK play only. We are looking to be a European play and potentially a global play. So if you think that Laka might make sense in your home country, we know that other cyclists from across the European Union, for instance, take a keen interest. Don't think you're limited because you're not in the UK. Please, let's have a conversation. Yeah, Laka is here to grow European-wide. So yeah, I think having engagement conversations there would be fantastic.
Good. Okay, well, anyone who's interested in taking Toby up in a conversation on that, do reach out to them. I mean, I think what I would say is that you're being quite modest, Toby, which is that, as I started off the show, it is genuinely It is genuinely extremely rare that businesses are really, really innovative. On the show, I've had plenty of innovative businesses, well over 100 businesses by now. This is episode 167. But you guys are radically innovative, shall we say. So that's very rare, firstly. And then secondly, as founders, well, no, but people perhaps who haven't been in founders or in small companies or startups may not appreciate, which is that one of the real arts of being a founder and being onto a good message and onto a good business model is that it's so straightforward that you make it sound straightforward and quite easy. However, those are the people and those are the businesses which actually it's very hard to replicate yourself. If I was in Albania, for example, I'm listening to this think, oh, that sounds easy. How hard can it be in the famous Top Gear words? Well, actually, there are people like you who make it sound easy, but they're just being modest. It's like sort of the duck, below the surface, there's lots of paddling going on. So I think that, were I to be in Albania or anywhere else ending in IA, Estonia, or anywhere else ending in different letters indeed, then my first plan would be, hey, I think I could do this. Well, look, I'll partner up with Laka somehow, in Albania, in Estonia, because maybe something in what Mike says is true, which is actually the classic answer to how hard can it be is far harder than you imagine. So I wish you every success with the crowdfunding. I shall not put wheels on my indoor bicycle, but I think you've perhaps embarrassed me, and I shall go now and embarrass Bridget. I've got embarrassed a few episodes ago about not using my standing desk, so I'm now being embarrassed, and I shall take off all the clothes that are hanging on the exercise bike. I did actually use it recently, and give it more of a go. So thank you very much for that, Toby, and I wish you every success in the future.
Thanks so much, Mike. Thanks for having me again.
Thanks for listening. If you have any challenges or needs with your unlisted company board, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a band there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. The city goodbye. Watch the firelight dance with me. 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 Watch the firelight dance.